And then one last quick reminder that today's webinar and Q&A section is for educational purposes only. Final rates and or products, services, and offer requirements should be confirmed with a credit union representative at the time of service. All right, now that I got all the boring stuff out of the way, I'm going to introduce everyone to our fantastic presenters. First, our co-host Tierny has been with the credit union for the past 13 years, all of those with the loan department, and now serves as the manager of loan processing and outbound outreach. Impressively, one of her favorite vacations spanned over 3 months, where she traveled to London, Cozumel, and ended the year in Japan. Alongside Tierny is Jack Moore. He has worked in the community engagement department at the credit union for over 16 years and says his favorite part of the job is that light bulb moment when people realize how the credit union can improve their financial welfare. A couple of fun facts about Jack. He's visited 48 states in the union, as well as the Virgin Islands. And if you've ever had a conversation with Jack, you know that he is a self-professed DFW sports fanatic. Jack, I won't go far, but the floor is yours.
Thank you, Sutton, and thank you, Tierney, for being here, being my co-pilot here. So as Sutton said, this presentation is geared primarily towards using equity in your vehicle to drive away from debt, pun intended. So I do want to just preface here that this was as a response to a number of attendee feedback that they'd like to see a webinar about something like this. But as we go through today's presentation, I want you to remember that you don't necessarily have to use any kind of your car's equity for debt. It can be used for a number of different things, and we may use those interchangeably, but our primary focus was leveraging that car's equity to reduce that high interest debt that you might have. All right, so keeping that in mind, we always like to state a little bit of a goal to start things off. And today we hope to share with you the means to empower you, our members, to take control of your finances by using your car's equity as a smart, low-cost way to access cash that you might not know you have, thereby reducing debt. Pretty simple. So in order to kind of convey some different concepts and your options, we're gonna stick to a little bit of an agenda here. First of all, I think it's important for all of us to set the baseline and understand what a vehicle cash out loan is. We'll go into a little bit about how that works by explaining the benefits of tapping into your vehicle's value versus maybe other loans or other financing options that are out there. We'll take a look at the credit union cash outs versus some risky loans, some title loans. You'll hear a number of different things thrown out as far as what to call the equity in your vehicle. And we just want to make a clear distinction to you all of what's out there in the lending environment versus what the credit union can do to support your long-term goals. And then last but not least, we will cover some solutions and support that you can depend on from your credit union team, whether that be a loan officer, an MSR, or us here on the call. And part of that will also cover some additional promotions that might help you understand how you can best take advantage of these car financing options. So I do want to just throw out one other thing before we jump into our first polling question. There is a distinct difference between cash out loan versus equity in your car. What I mean by that is, let's say you have equity in your car. It's sitting there, it's worth something. You've paid down your loan. Your car has value after the loan is there. And then the cash out part of it is essentially increasing that loan so that you can tap into that cash. So just wanted to throw that out. We'll explain more in a little bit of detail, but it kind of brings us into our next question. If you could get that cash in the vehicle, what would you use it on? Sutton, stole your thunder of reading out the question, but I'll let you go through the whole roll.
Honestly, like, I shouldn't even be here, Jack. That was such a good segue. I don't, me and Sarah's jobs are on the line.
I don't want it that way.
As Jack said, this is our first polling question, and we want to know, if you had extra cash this month, what would you use it on? And just a reminder, if you're tuning in on a mobile device, you may need to swipe left or right on your screen to see the polling questions and answers. And our answer options today are A, pay off credit card, B, tackle surprise bill, C, take a deep breath and save it, D, finally fix that thing around the house, or E, treat myself. Honestly, If I had to answer the question right now, I would also pick E, treat myself, because I'm always down to treat myself. Sarah, what would you pick?
Yes, I would say E as well. Treat myself. That could be like spending it on my car, go get a nice car wash, spending it on myself, spending it on a trip. So definitely in the E category.
Jack and Tierney, what about y'all?
I'm Eve. I'm trying to prepare for the next trip. So yes, that's where I'm putting my money at.
Yeah, dear E for me. If I'm pulling cash out of my car, I hope it's not for any frivolous stuff. But so I'm not here to judge y'all. But if I had to, it would probably be more of a D. Finally fix a few things around the house. But of course, I'd be tempted with E. So
Looks like some
what?
attendees said A, somebody said B, somebody said move out, pay off loan, so
A
another
little bit
treat
of everything.
myself. Yeah, a little bit of everything.
There we
Okay.
go.
Excellent. Excellent. Well, that just gives us a little pulse of the room here. I think we have one more polling question later on. Again, y'all, these are anonymous, so feel free to throw in your responses without fear of being called out or chastised or anything like that. But whatever it might be, as far as what y'all are looking to use cash on in refinancing a vehicle, we're here to tell you how that works and give you some other ideas about how it can work best for you. So before we do that, though, I kind of teased it a little bit, but what is a vehicle cash out loan? Put it very straightforward. It lets you borrow against the equity of your car. So whether you've paid your car off entirely or you have an existing loan and you have paid on that loan for a while, you can access the equity in your vehicle at the same rate that you might find on auto purchases or refinances. So some of the main benefits, and we'll cover a few more later on, is it is a really simple application process. If any of you guys have worked with the credit union to finance a vehicle, we try to make it as easy as possible, whether it be the decisioning of the loan itself, as well as working with you to get what you need out of the vehicle. It's no different here. It's essentially the same as a car purchase, except it's not. You really are just tapping into the equity of that vehicle. Everything about that vehicle, and you're able to access the cash there. That rate will still be a great rate. That's what we pride ourselves on here at the credit union. So just know that your debt and your debt to income, your credit score, and your overall credit worthiness are what influences your rate. With that said, though, the credit union typically has better than market rates on our vehicle loans, and you can access those. The other cool thing, when it comes to acquiring debt, if you get a mortgage, you can only use that for your house, right? When you buy a car and you have a car loan, that's to pay for your car. When you tap into the equity of your car, you have a flexible use of funds. In other words, we're not going to sit here and make sure that you use those funds for any one thing, which gives you the ability to pay off high interest debt, maybe make those home improvements, take that trip, what have you, typically at a lower rate than an unsecured loan. The other benefit of a cash out loan is flexible terms. In other words, we could do as little as a few years, or we could extend that out depending on the age of your vehicle to some 7 years at times. So you get to control, in essence, what your terms are, and that can help affect your monthly cash flow. The idea there is the shorter the loan, the more you will have to pay on a monthly basis, but you might get a better interest rate. Whereas if you extend the life of that loan out, it will have a lower monthly payment, maybe a little bit higher interest rate, but that could improve your cash flow. And if you are doing it, say, to pay off high interest debt, cash flow is going to be important to you. We know that. Tierney, as far as some of the things I covered here regarding the benefits and a little bit of the concept of a cash out refi, did I do okay, or is there anything you want to add?
No, you nailed it, Jack. I'm in the same category as Sutton and Sarah. I might need to watch out.
All right. Yeah, as long as y'all take over all my other duties, we're good. All right. So continuing on here, y'all, we do want to just throw out a quick reminder that you can take out a vehicle cash out loan, whether you have that existing loan on your car or if it's paid off. So maybe you bought the car for $10,000 a few years ago, or excuse me, financed it for $10,000 a few years ago. That's what it was worth. And you've made those payments over the last year or two, and you're down to $5,000 left on your loan. Depending on the value of your car, the depreciation, you might have a few $1,000s in equity, and you can basically combine your existing loan with a new loan, and now you have one loan, right? So we take over all of it, wrap it all into one, and give you that cash difference from what you owed on your previous loan and what you're looking to refinance overall. If your car's paid off, it's worth $10,000. Depending on the make, model, and your current situation, everything like that. For all intents and purposes, you may be able to pull out $10,000 worth of cash, finance that, use it on what you need, and then start paying on your new car loan, if you will. Is there anything else on that one, Tierney, that you'd like to add? Hope I didn't complicate it too much.
No, no, didn't sound like it was at least to my ears, it didn't sound like it was complicated at all, Jack.
Right on. Okay. Well, I just want to, again, y'all, this whole webinar is not just exclusive to those that have paid their car off. If you think you have equity in your vehicle, all of everything we're about to cover may still apply to you. All right. So I mentioned that we go a little bit more in depth into some of the benefits of tapping into your vehicle's value. So as promised, here's a few reasons for refinancing an existing auto. So what I'm going to focus on in this slide is just purely the refinance perspective. And then at the end of this section, I'll round it out with the benefits of a cash out refinance. So in a refinance of a vehicle, we're looking at what you have remaining on your loan. Again, to go back to the example, you bought a car for $10,000. After a couple of years, you owe $5,000 on it. And you're looking around saying, hey, maybe I could get a better deal, or maybe your needs have changed. And you just want to take that $5,000 remaining and refinance it. So that's absolutely applicable here. What that can do for you is lower your current rate. Let's say maybe your credit score wasn't where you wanted it to be. Maybe rates have dropped, and you see some of our fantastic marketing ads, and you say, I think I could get a better rate, which will lower your monthly payment. Whether you extend out the life of the loan or anything like that is up to you. But if you want to lower your rate, great opportunity to refinance. You can also reduce your monthly payment through two means. You could lower your rate, which is basically going to reduce your monthly payment, or you can extend the life of the loan. So let's say you had 3 years left with $5,000 left on it, and you want to extend that out to 5 years. You may not lower your rate completely, but it will more than likely lower your monthly payment. So that's a reason why a lot of people do that, just to improve their cash flow situation. And if you've got extra cash at the end of the day on a monthly basis, hopefully you use that in a responsible manner, whether it be treating yourself or whether it be paying down high interest debt. The other thing, which I said is the basis of today's webinar, is maybe you want to get cash out at a low rate. And of course, that's what we're talking about today, but I've got some more details on the benefits of that here in a moment. Some people want to consolidate debt. So maybe you've got a whole bunch of student loans or high interest credit card debt, or you have an unsecured line of credit. What you can do is refinance and potentially get a cash out, pay all that debt off. The last reason that we see a lot as far as why people just refinance an existing auto is maybe they want to add one of our value-added services like extended vehicle warranty protection. We can wrap that up into the auto loan and allow you to pay on that. So a lot of people, as they get a little bit closer to maybe their manufacturer's warranty or anything like that, they want to add on additional protection, and they don't necessarily have the funds to come out of pocket. So what we can do is look at refinancing, rolling that vehicle warranty protection into the loan itself, and allow you to achieve that lower rate as well as that added protection and peace of mind. Tierney, are there any other reasons that you see besides the cash out refi and some of the other things that we covered here of why people might refinance an auto?
Unexpected reasons. Unfortunately, you have people who pass away and might not have the life insurance
Right.
to cover burial expenses. That's happened quite a few times. Um, or health reasons, but any reason that you would just need a little bit of extra cash. And you, like you said, you have that equity in the vehicle, just reach out to us. And this might not be something that you're even thinking about, but reach out to a loan officer. It's our job to come up with different alternative ways to
Yep.
try to, work with you and get a loan.
Yeah, excellent. Yeah, anything, whether it be a relief from a high bill or like Tierny said, the unexpected. All of these are applicable for whenever you're looking at refinancing or even a cash out refi. So I'm going to drill down a little bit more into detail of some of these topics that we covered. So maybe interest rates have dropped, like I said before, and perhaps today's rates may save thousands over the life of the loan, depending on how long you have to pay on it. I have seen, speaking of people say outside of the credit union, they finance their vehicle with the dealership or with whomever. I've literally seen people go from 16% down to 6%. And, it's one of my favorite things working for the credit union when that light bulb moment goes off and I see firsthand how we can help them. But that's just an example of why you might want to refinance and take advantage of lower rates that may be available to you. And more often than not, like I said before, we do offer lower rates than most other financial institutions. Granted, the dealerships, they've got some great promotional rates and things like that. But by and large, if we were to take a sampling, we can do better than most of the major players out there. So if you're looking around for lower rates, come talk to us. At the end of the day, Tierny and all of our fellow coworkers, we are not commission based. I'll repeat that. We do not make money off of you booking a loan with the credit union, which frees us up to be your advocate. So if nothing else, y'all, and you just want to kick some tires, pun intended, come talk to us and we'll see if we can do a better rate on your loan. A lot of people as well, whenever they're looking to get a car, they'll take anything as far as the situation goes. They haven't had time to necessarily look at their credit history and improve it to ready themselves for the buy. But a lot of times what happens is when you're making those timely payments on your vehicle, as well as any other debt that you might have, your credit score can go up. So if you've put in the work and you've improved your credit history and your credit score, maybe you're making a little bit more money than you used to. All of these things can help us to refinance potentially at a lower rate and in better terms. So it allows you the opportunity to save some money and strengthen your financial position. So again, if your situation has changed where you've improved, keep us in mind. Definitely worth looking at refinancing or even do a cash out refi. All right. Maybe you didn't get the best rate when you initially purchased your vehicle. This could have been due to a number of reasons. Like I mentioned before, maybe you went through the dealership and they kind of pressured you into taking their financing in order to get a certain promotion or just to be able to drive that car off the lot. We can always take a look at it, and depending on their terms, on their loan, we may be able to refinance at a lower rate or better terms. We talked about the term of the loan. In other words, the amount of time that it takes to pay back the full amount. We may be able to adjust that to fit your budget. Again, extending the term of a loan will typically lower your monthly payment and hopefully give you a little bit of breathing room or allow you to allocate those funds to an area of higher need. Again, like I said before, we're not here to be an infomercial, but we do believe in what we do for our members. But by refinancing through the credit union, you could even contribute more to your savings accounts. So, maybe you need to build up that emergency fund. And whenever the credit union gives you great rates, extends the terms or anything like that, that puts that added cash flow into your pocket, rather than being frivolous and taking that vacation, maybe you just build up your emergency funds and save for a rainy day or even your next vehicle. A lot of folks, especially in the aviation industry, we see this a lot with pilots and flight attendants most often, to be honest, is the idea of leasing a car. So we do not offer any kind of a lease program at the credit union. So what we do offer, though, is the ability for you to take ownership of a leased vehicle at the end of your contract. So a lot of times, whenever you reach the end of your contract, you're looking at the details of taking the car back in, maybe trading it in for a new lease, that sort of thing. You're oftentimes given the chance to buy the car, and if you love it, if you know it, uh, it may cost less than starting out with a new lease or even a straight up new purchase. So the familiarity of the car, all of the dings, dents, the humming noise, all that. A lot of people feel safe knowing what they've got. Uh, by by actually purchasing the vehicle, you can start down a pathway of turning a lease payment into equity. As many of you know who have leased before, whenever you go to turn that car in, you don't have anything to show for it. Basically, you have no equity. And so a lot of people, while it's not necessarily refinancing per se, will look to buy that vehicle through a credit union financing. And we like to throw it in there as a quote unquote refinancing option. So that's a lot of what a lot of people will do. All right, as promised, at the end of this section, reasons for taking a vehicle cash out loan. Talked about it before on refinancing in general, but that debt consolidation, which is what we're here for, being able to identify that high interest debt, whether it be credit cards where you're paying 23, 24%, maybe you have some medical debt and you're tired of people calling, you just want to take care of it and you want to do it at a lower rate than an unsecured loan, come talk to us. A lot of people will make those home repairs. I mentioned at the onset, whenever we did our polling question, that's probably what I would use it for. All those little like cracks and maybe a new paint job, things like that. And I don't have access to cash by other means, or I don't want to go through the mortgage refinance process. Looking into the equity in your vehicle can be a fantastic way to tap into that equity without paying out of the wazoo. Maybe it's something as simple as an air conditioner broke and you need to get that repaired. All these things are important. They're timely, and a vehicle cash out refi loan can make a lot of sense. I mentioned the medical bills. If you've got those, nobody likes them. A lot of times they can be extremely stressful, knowing that you're trying to fix yourself or a loved one, and yet you've got to fix your finances too. This can certainly help. Tierny alluded to it earlier. Maybe you got some unexpected expenses. Maybe it's to your vehicle itself. Maybe you need some new tires on it. They're getting a little bare, or you have a blowout, or something like that happens. Or maybe it's just something in your personal life. But the vehicle cash out refi loan is way quicker than a lot of our other loan products. It can help you get a hold of those funds when you need them most. We talked about it before. Maybe you want to do a cash out refinance to finance a vehicle warranty protection. We'd be happy to do that. And then I know we joke about it, but those trips, y'all, they can get pricey, even though a lot of us are in the aviation industry, may have those flight perks, but maybe it's really important that you take a certain trip. Maybe it's a loved one that you don't know how much longer you have with them, or maybe it's a YOLO moment, you only live once moment where there's a certain event that you need to get to. These are all reasons that a cash out refi may make the most sense for you. But at the end of the day, what we really want to encourage y'all to do is to do it responsibly. And that's why we leaned into the topic today of getting rid of high interest debt with a cash out refinance loan. Tierny, I'm gonna pick on you again. Would you say that whenever you've dealt with refis in the past, that's one of the major reasons that people would do a cash out refi, or what are some other reasons, again, that may not be on this screen?
I've actually had someone do a cash out to help purchase a cash vehicle for one of
Hmm,
their kids. Um, that was a special moment there for them, trying to help
cool.
them buy their first car.
Mhm.
Um, let's see what else. I
Do you
mean,
see it?
we've covered majority of the reasons.
Yeah, I was just wondering, just kind of as a percentage, if you see many people doing the cash out refi to pay down debt, or what's kind of
I
the
would
most
say
common?
that is the main reason, is to consolidate the debt. The credit
Mhm.
cards, those rates are normally, you know, 20-30% on some of those cards.
Yeah,
And why not use the equity of the vehicle and bring that down to like a 6-7% for an average person? It just makes
yeah,
sense. And it frees up money on both ends, the car, if they're extending the term, like you mentioned before, and then just paying off that credit card debt. You don't have to continually make a $300-400 credit card payment.
Yeah, yeah. And I looked it up just out of curiosity earlier. Forbes says that the average credit card interest rate is 25.34%.
Yep.
And do you know off the top of your head, sorry to put you on the spot in case you don't have it in front of you, what the average or what the range of our auto loans are, say for a refi?
I don't have that information, Jack. I apologize.
I know it's better than 25.34%.
Oh, that's for sure.
So it looks like our auto loans are as low as 3.99. And right now we'll get to this. We got a special promo in September where it's as low as 3.74%, depending on your credit worthiness. But suffice it to say that sure beats a 25% interest rate.
Absolutely.
Because it's a collateralized loan. So yeah. I'll pick on you here in a moment, Tierny, a little bit more. But I'm going to move on here and just pause for a second. I know we've talked a lot about like refinancing, cash out refinancing, maybe some of the benefits. And before we go through any of the process or anything like that, I wanted to check in with Sutton and Sarah, see if there's any questions in the queue.
Sarah, I don't have any questions in my queue. Do you have anything in yours?
Yeah, I received two questions. One of them is, does my car have to be a certain age or mileage to qualify for a vehicle cash out refi?
That's a great question. I'm going to turn it over to Tierny. I know that the general answer is probably yes, but I'm gonna lean on the expert. I hope you know.
All right. Yeah. So I just want to clarify, you said cash out refi, correct?
Yeah.
Okay. So typically we would like to have the vehicle 10 to 12 years old. However, it is on a case-by-case basis if that particular vehicle still has the equity in it, especially if it's a diesel. Like a lot of trucks definitely hold the value, even though it might be within the 10 years, the mileage is very high, 150, 160,000, but it's a diesel, so it'll maintain good value. So what I would suggest is to have the VIN and the mileage and just reach out to the loan officer and let us pull the value for you. And then we'll subtract what you owe with that other financial institution. And then we can let you know how much you have in equity.
Perfect. Great answer. And then another one, which I think you guys may have answered it already, but will refinancing extend the length of my loan?
It does not have to. We
Mhm.
can, but it doesn't have to.
Right. So we'll
That's
work
all.
with you, yeah, with what you need. If what your and we'll ask you what your goals are. Why do you want to refinance? A loan officer will work with you, whether it be lowering the interest rate, maybe it's the monthly payment that's giving you some trouble. We may be able to extend it out and or lower the interest rate. But at the end of the day, to Tierney's point, you don't have to keep the same term. We can always extend it. Shoot, if we really wanted to, Tierney, we could shorten it.
You know, I was going to say we could shorten it, pay it off a lot quicker, and save
Yep.
on that interest. Again, it's up to what you can handle on a monthly basis. Like Jack mentioned, we're not trying to put a loan on the books. We're just trying to assist you.
Sarah, you said that's it for now.
Yes, that's all I have for now. Thank you guys.
Thank you. Great questions, y'all. Keep
Keep
them
'em
coming.
coming.
Yeah. In the queue, the Q&A, go ahead and send that to us. We'll stop again towards the end of this presentation and address any other questions that have walked in. All right, so we're to our third section here. And this next slide is I'm gonna spend a little bit of time on it, but just know you don't need to get your phones out or take pictures unless you really want. You can request a copy of today's presentation by filling out the survey that's coming after today's webinar. But what I want to kind of cover here is compare and contrast of a cash out loan versus a common term that gets thrown around in the industry of a title loan. All right, so here's your fancy, handy Excel spreadsheet looking chart here. So let's take a look at interest rate. With a credit union vehicle cash out loan, we covered that we're extremely low rate compared to what's out in the market. And we do our best to benchmark our interest rates off of the market and some of our biggest competitors and try to beat them. So we really do strive to be competitive. With a title loan, maybe I should back up and say, a title loan, you can go in, I see them. And we're in Dallas, or I'm in the Dallas area. I see title loan places all the time. Basically, they take ownership of your vehicle, and you're kind of paying to get it back. And there's tons of fees. There's interest, etc., which brings it to over 100% APR sometimes. And APR takes into the total cost of borrowing. So whenever y'all are looking around, always look at APR when it comes to loan, not just interest rate, because that includes any fees, processing fees, the interest rate itself, the total cost of the loan. And honestly, y'all, when I started to research this, it can get up to 300% APR. You are paying like a king's ransom just to borrow from your car. As far as the terms go, with the credit union, they're reasonable, member friendly. Like Tierny said, we'll work with you to achieve your goals as far as the length of the loan goes. Whereas a title loan, every 30 days, that's about as long as they're good for. And then you've got to do the process all over again, which brings us to the repayment support. We offer great member service. It's not like we sell your loans anywhere. We service and hold all of our auto loans, which gives you the peace of mind of knowing where you need to go to should something go awry, or if you have questions, or you need to change things up. That allows us more flexibility for your repayments. With the title loan, man, if you miss one payment or you're late, you might be looking at the Reaper. They're coming to get your car. So again, it's a little bit more, it's not as lenient by any means when you go the title loan route. As far as your credit impact goes, if you do a cash out refinance with the credit union and you're making those timely payments, we report those as good payments to the credit bureaus, which in turn can improve your credit. Whereas a title loan, usually they don't report much or anything until it goes negative. It's not like they're in a hurry to say, oh my gosh, Tierny, you made a payment this month on your title loan. In 30 days, oftentimes there's not even reporting to be had because most financial institutions report on a monthly basis. So if they do report, it's not usually in your favor. And then as far as the car title goes, whenever you finance with the credit union, we place a lien, if there's not already one on your car, on your title. That's like with any car loan. Whereas, like I said before, with a title loan, they literally have your title and kind of hold it ransom until you pay them. And then, they sign it back over to you once all debts and agreements have been fulfilled. As far as the risk of possession goes, the only time that the credit union is going to come after your car, and it's not even us, trust me, we don't want it. We would rather you have your car, is only if you're in extreme cases of defaults. We've done everything to try to let you keep your car, but you're just not making payments. That's the only time wherever the rubber hits the road. Whereas a title loan, I've heard stories, y'all. I can't even, it can be bad. It's almost mafia-like, where the risk of repossession is extremely high, even for small or late payments. They don't play around. There's a lot of money to be had, and they want to make sure that they get what's theirs. Last but not least, on this slide, as far as fees go, there's no fees for refinancing or doing a cash out refi with the credit union. All of our loan officers are paid a salary. As far as the processing goes, we don't charge any additional fees for the title work or anything like that. Whereas with the title loan, incredibly high fees. Rollovers, in other words, going from like a 30-day title loan and rolling your next any remaining balance that you owe to the next month, that costs money and it gets really expensive and it becomes a compounding problem that's really hard to dig yourself out of. So again, extremely high fees associated with the title loan, which is what brings that APR over 100% and even up to 300% at times. So check in with Tierny. This was a lot on this slide. Y'all, this is just a a general compare and contrast against credit union vehicle cash out loans and title loans in general. But hopefully, Tierney, I gave some good information. Anything that you would add? All right.
I think we may have lost her for a second.
Just for a second. We'll move on. I'm going to take that as a vote of confidence.
I'm sorry, guys. I have no idea. It just went all the way down. Did I miss a question?
You did. I was just checking with you. Is there any other major differences besides what we see on this slide, based on your experience of the differences between going with a credit union on a cash out loan versus a title loan?
No, you nailed all of it. I mean,
Okay.
mainly just the APR is the main point of reference here. It's
Yeah.
a huge drastic difference. And there's no reason to pay that much money
It's
to
just not.
take
It's just
out
not.
equity on your own vehicle.
Yeah.
Yeah.
And if you do, y'all, and I'm not here to be paternal or anything like that, but if a title loan is your last resort, please come talk to us. It may require some life changes, to be honest with you. But we do have a fantastic group here. I'm not sure if we plug them later, but we have a financial wellness group who specializes in repairing bad credit, in creating budgets or spending plans that meet your needs, and even having referral services to consolidate debt or to help improve your credit situation that would allow you additional options when it comes to accessing cash. So all that to say, if title loan is the path of least resistance, please come talk to us first. We may have some options for you.
Please. Yes.
All right. So moving on here, I'm going to talk about, some solutions and support from your credit union team in general. In other words, let's say, you need some cash, you have equity in your vehicle. What's next? So to save you some time, and so there's not a ton of back and forth, we've prepared a couple things that we'd love for you to bring to your first meeting with a loan officer or a credit union representative, or whenever you first get online to apply for the loan, or before you pick up the phone to call us. Just keep these things in mind. For the most part, the basic things you'll need is your VIN, aka your vehicle identification number. That's typically up on your windshield in a little spot. It's probably on your title. Your insurance agency probably has it. Do a Google search if you don't know how to find your VIN. The other thing that's super helpful for us to determine the value of your vehicle and our ability to finance it is the current mileage. So again, check that odometer. For the most part, an estimate is good for starting the conversation, but eventually we'll want to get the exact mileage before we close on any loans. The other thing that we could use is the 10-day payoff from your current lien holder. So if you already have a loan on your vehicle, you can give them a call to your financing institution and ask what the 10-day payoff is. That allows us enough time to know what you owe in the next 10 days so that we can make them whole and eventually take over the loan, so to speak. So we got to know what to pay them so that your balance goes to zero so that we can take on the responsibility of servicing that loan. A couple other things that may be helpful, especially if you're bringing over an outside loan to the credit union, we need proof of full coverage insurance. That's the case on all of our finance vehicles. So be prepared with that. If you don't already have it, you can still start the process. Just know before we close on any loans at the credit union, you do need full coverage. Maybe that's something we can throw up there before we distribute this. Is there anything else, Tierney, as a loan officer that would be especially helpful for you whenever you're making a lending determination?
Now, these three things are exactly what we need, Jack. It's a very simple process for us to let you know basically if you're in person immediately, if you have the equity in the vehicle and how much we would be depositing into your account here with us. We can also cut a cashier's check for you to take and, perhaps send that to another creditor to pay off the credit card bills or consolidate the debt. But or if you give us a call, again, it's something that we can do basically same day to let you know how much equity is in your vehicle and how much you would qualify for.
Good enough. So if let's say I had all this stuff ready to go, Tierney, and I give you a call, I'm ready to move forward with a cash out refinance. I got my VIN, got my current mileage. I've called my previous financing company, got my 10-day payoff, and I've got full coverage. How long do you think it would take for the credit union to make a determination or a lending decision?
Max 20 minutes.
Oh, wow. Okay. Provided there's
Simple,
nothing,
quick.
provided there's no other loans in the queue ahead of you,
Right, right. So,
So,
I mean, if you're giving us a call on our 800 number, getting through to one of our loan officers in the phone loan department, you know, if at 20 minutes, you know, we will put you on hold, pull your credit, review everything that you submitted over to us. There's a possibility we might ask for a pay stub.
right.
So just depending on how quickly you get that over to us, we're ready. We're ready to rock and roll.
And what I love about this, y'all, is like Tierney and any loan officer at the credit union, they'll present you with the facts. They'll understand your situation, whether it be your existing loan terms or just your needs. And their goal, again, is to be your advocate. So by you preparing and having all this thing ready, they can get you that answer and start having that consultation and advocate for you that much sooner. At the end of the day, if they pull your credit, they look at the terms, what we can offer, et cetera, and you're in a better situation by not refinancing or doing a cash out refi, we'll tell you. Again, not commission based. We're here to serve.
Exactly. We won't force your hand at all.
Not at all. Not at all. The other thing I'll point out here, y'all, and it's in bold on the screen for a reason, that if you are approved for a loan with the credit union, cash out refinance, we can actually do up to 100% of the value of the vehicle, pending credit approval, of course. So that's why it is important that you bring this information so that we can determine the value through a number of different resources, NADA, Kelly Black Book. What do you use, Tierney? Or what do we use?
We use JD Power, which
JD
is
Power.
NADA.
NADA.
New
Okay.
name.
So yeah.
New name.
Yep. Oh, duly noted. Didn't know that. So yeah, JD Power will give us the estimated value of your vehicle, and that's what you can borrow against. All right. A few other things. So let's say, you know, we give a lending decision. You know, if you're approved, you may, and let me back up and just say, if you have paid off a vehicle and you have a clean title in hand and you're looking to do a cash out refinance, you may have to take one extra step. And that's to visit your local DMV with the title and add us as a lien holder before we can distribute any funds. Again, this is primarily for those that have that clean title in hand showing that you paid it off in full. We got to kind of undo the paying off of things and add us on as a lien holder. Is that eloquently put enough, Tierney, or you want to add anything to that?
Yeah, so this would be the only cost that you would pay yourself out of pocket, is just to have our lien added. Every state is different with the cost to that. But as soon as you do make that payment and show that let me back myself up as well. I would suggest for you to reach out to the loan officer first before adding our lien our lien on that title. We don't want you to go to the DMV, add our lien, and then for whatever reason, we can't finance that particular vehicle. Now you have to pay to get it taken off. So if you own it free and clear, give us a call first. Let us tell you how much we can give you, and you make the decision on if it's good enough for you or not. And if so, then head to the DMV and have our lien added.
And then let's say that happens. Oh, and for those of you that have an existing loan and you have some equity and you're going through this process, you won't have to visit the DMV, right, Tierney?
No, you won't.
Good to know. So once that's all said and done, we feel good about the title situation. You've gotten us all the information. We say you're approved. You know, when we receive the receipt from the DMV or anything like that, we'll call and we'll close that loan. Tierney, the distribution of funds how do you usually distribute those funds? Is it just
The
dropping it
easiest-
into their account?
Yeah, the easiest way is just dropping it into your checking or savings account here with us, and then you go on about your way of, moving the funds how you want to.
Okay, cool. Do we do any kind of live checks or anything? Not
Anywho?
typically. Like live checks or anything like that? We cut checks for that or no?
Not typically. That's not the normal route. Most people want to just, move the cash how they want to. So we'll just put it in their checking account.
I'm a digital person. So yeah, put it in my account where I can see it. I'll take care of it from there. So
Yep.
excellent. So hopefully that gave you all a little insight into the process and some considerations to keep in mind. But all that said, we want to ask you before we kind of close out or get into some of our offers and how else we can help, another polling question. Sutton, I'm not going to step on your toes this time, so I'm going to turn it over to you for our next anonymous polling question.
So awesome. Thank you, Jack. So for our second and final polling question of today's webinar, we just want to know, what's your biggest concern when borrowing against your vehicle's equity? And it is a short answer. Just a reminder that if you're tuning in on a mobile device, you may need to swipe left or right on your screen to see the polling question in the answer box. I know we're cutting it close on time. Sarah, do you see anything in the chat?
Let's see. It looks like people are typing their answers, but the concern is crashing the vehicle. Affecting
Okay,
my
so
credit score? Is that,
Okay.
oh, y'all can talk about that one.
I can't, whenever the system shut down, I can't see anything anymore. So do you mind repeating yourself, Sarah?
Yeah, so the question is, what's your biggest concern when borrowing against your vehicle's equity? Somebody said crashing my vehicle.
So
Okay.
can I speak to that real quick?
Okay.
Yes.
All right, you got it.
So one thing to keep in mind, let's say you borrow 100% against your vehicle, and we all know that vehicles are a depreciating asset, which means if you were to total your vehicle and something happened where you owe more than what it's worth at that time, you may be out of pocket or upside down, as one would say. We do have a solution for that. It's called Guaranteed Asset Protection and Deductible Assistance, also known as GAP and Deductible Assistance, that essentially steps in to pay for the difference between what your car's worth and what you owe. So the insurance agency is going to cut you a check for what it's worth, but then we're going to ask for a check for what you owe. That's where the GAP can step in and potentially assist you with that kind of an issue. And then anything you'd add to that, Tierney?
It is something that we always suggest on every single auto loan. We offer all of the products, and it's your choice to make it. We can give you a quote of what that payment would be with or without it. And it's also something that we could add to the back end of the loan as well. So that's with GAP, warranty, or the credit, life, and disability that we offer to our members.
Awesome. We got solutions for it. What else you got,
We
Sarah?
definitely
What's a
got the
few of them?
solutions.
Some other concerns are loan term, not using the money correctly. I would have to agree with that one. And the idea that someone can take my car if I default, the mafia coming for whoever.
So what was the first one was loan term? Is that what you said?
Mhm.
Okay.
Yeah.
So again, the term is based on your preference. We can go over payment amounts per 12, 24, 36, 48, 60. We can tell you what that payment would be, and you decide what term it is that you want. Again, it's based on the amount that we're allowed to give to you for that particular vehicle. As far as coming after the vehicle, yes, that it would be a concern. But like Jack mentioned, it has to get to a really bad situation for us as the credit union to try to come and repossess the car. We wouldn't start trying the repo process on a 30-day late.
Yeah.
It'll take some time to get to that repo position. And even so, our department in the collection side, they really do work with our members.
Yep.
Definitely.
Any others, objections or concerns, Sarah, that you see there that we might be able to address?
I have one question that I want to save to our Q&A towards the end. It's more
Cool.
of like a question, so I'm gonna save that for our next
Stopping point.
stop. Mhm.
You got it. Well, thanks for y'all's participation on that. And hopefully we're able to debunk some of those concerns. They are all valid. Don't get us wrong. But we would hope that we put you in a situation that gives you the peace of mind, knowing that your investment is safe, that your ride is going to be your ride, and that you are getting the best deal possible.
And just real quick to chime in, Jack, we don't
Yeah.
have a prepayment penalty. So
Oh, yeah.
if for at any reason you get the cash to pay it off, we'll immediately release the title within 10 days, and that title is back in your possession.
It's good to know. No prepayment penalty, y'all. So we'll let you pay us as soon as you're ready. All right. So some other ways that the credit union can help get the process started and or help you out during the life of the loan are what we cover on the next couple slides. So a lot of people don't know this, but we have an incredible hidden secret called the timely payment discount. Maybe you're in a situation where your credit isn't exactly where you want it to be in the alphabet scale. Maybe you're more of a C and D credit tier loan. So you were approved, but maybe at a higher rate than you expected or that you desire. We're here to reward you, though, for positive financial behaviors. So here's an example of that. We will give you a rate reduction of 2% after 12 months of on-time payment history, as long as you meet a few requirements that are listed here on the screen. And that's on an annual basis. So if you have a 5-year loan and you're looking at, say, I don't know, 12, 14% interest rate, you could be as low as 6 or 8 by the time you pay that loan off. But you do need to fulfill your end of the bargain, and that's no late payments, that you set up automatic payments, that you have online statements at the account level, that you carry full coverage insurance on your vehicle, which we require anyway, and that there's not a title in suspense. In other words, we're on the title, we are a lien holder, and that you keep that current. So these are pretty straightforward and very easy to achieve. And we want to reward our members for that timely payment and give them a discount. So we'd rather do that, take care of our people that have trusted us already, than have you go shop around for a lower rate. And even said, if you still think you could get a better rate and you're on the timely payment discount program, never hurts to hook up with a loan officer and see if they can better your situation. Anything else on that, Tierny?
It's automatic. You don't
Yep.
even have to think about it. You just have to handle those 5 simple steps.
Exactly. All right. So let's say you're ready to apply. You're thinking about all this debt you have. You're thinking about the equity in your vehicle. You want to know what your rate is, what the terms would be. How do you do that? Pretty straightforward here. You got 3 main options. Number 1, visit aacreditu.org/auto. There's some information on how to apply there, or you can just log into your online banking account and over on the left-hand side, navigate to the apply button for loans. The 1-800 number, which is where you can reach Tierny and her team. We do have a phone loans department that specifically handles inquiries about auto loans and most all loans for that matter, just by calling that 1-800 number. And then if you are familiar with a local branch or you have a good relationship, you can always drop by and visit face to face. One other thing, and this is only good, y'all, for like 5 more days. We do have a phenomenal offer going on until the end of September. So make sure you apply between now and the end of the month and fund a loan by October 15th to earn these special promos. So this is only through the end of September. You could receive up to 0.75% APR discount whenever we combine our standard offers with this promotion. You can take advantage of a 90-day payment deferral, which gives you a little bit of breathing room for a few months to save up money or use it to pay down that debt. Or or sorry, not or, and you'll get a $100 cash rebate whenever you finance or refinance an auto with us. Again, another way that you could throw some money at some debt or, have a nice steak dinner. But again, this is only until the end of the month. So you want to make sure that if you are interested in doing a refinance, that you apply over the next 5 days and that you close that loan by October 15th. I'm going to turn it over to Sarah to round us out on a few other offers we have, some of which may or may not apply to vehicle and auto lending.
And I'm going to speak quickly here so we can get to
Sure.
Nicole's question. So in order to take advantage of our refinancing services or to apply for an auto loan if you need to, you need to become a member if you're not so already. So for those who'd like to start their member journey today, you can easily do so by scanning that QR code and using promo code BD4412 at the end of your application. And that code will take care of the initial new member deposit of $6. So you have nothing to lose. Plus, once you're a member, you're always a member. So that means if you decide to take another job opportunity outside of the air transportation industry, you can still retain those benefits. And then next, I'm going to highlight our summer offers that are going to be going on for what, five more days, yes, to the end of the month. So right now, when you open a new checking account, you can earn up to $200 whenever you set up direct deposit, use your debit card, and set up your digital wallet. On balance transfers, you can enjoy a 2.25 annual percentage intro rate on balance transfers whenever you open a new Visa low rate credit card. After 6 months, your rate will then vary between 11.25% and 18% APR.
So I just want to pause real quick because this webinar was about cash out refi and how to handle debt. That's another solution we have, y'all. We have an incredible balance transfer rate, and we may be able to combine that with a cash out refinance on your car. That just goes to show that Tierny and any other loan officer at the credit union will explore all possibilities to make sure that we are achieving your financial goals. Sorry, just had to put that in there, Sarah.
Perfect. Yeah. Way to wrap it up. But yeah, be sure to check out our rates and our offers on our webpage for more details on those promos. And now we can go, I'm going to go back to the question that I saw. Let's see here. When it comes to borrowing against your vehicle, does that affect your credit score? And if you're approved to borrow against your equity, does that mean I've refinanced and now need to put full coverage on the car?
Great question. So yes, you won't have to put full coverage on the vehicle. That's with any auto loan here with us. And then the first part of that question, what was it, Sarah?
Credit score.
Credit
Yeah,
score. Oh, yes. So yes, it will. We report every 30 days. So if you are making those on-time payments, you will have a positive impact on that credit, which will in turn boost your score.
And then as far as the loan application, and this is the case, y'all, for any loan that we do, virtually any loan, we will do a hard inquiry on your credit. I think the only exception, correct me if I'm wrong, Tierny, is if we have some kind of a pre-approval, or even then, do we still need to pull credit?
No, on a pre-approval, we will not pull credit.
Right.
But yes, that would be the only part of it that will be a hard pull. We pull through Experian. And like we mentioned on previous webinars, if you have your Savvy Money score and it comes in higher than what we pull, then we will honor that better rate for you.
Yeah. But at the end of the day, we do need a credit pull, and that's going to be for virtually any loan. That's going to be for any lender as well. The good news is, y'all, that whenever we pull a credit, it typically is only affecting your score by a few points, and those points are quickly returned to their full amount, usually within a year or less, is what I've read. So I wouldn't be so afraid of inquiring. If you know at the end of the day you're going to be in a better situation, it's a very, very small risk to take. So did that answer Nicole's questions?
I believe so.
Excellent.
Thank you.
Thanks for those questions, y'all. In the sake of time, because we're already about a minute and a half over, I'm going to turn it over to Sarah to close us out.
Yes, thank you all for joining us today. If you have something more personal you'd like to discuss, or if you'd like a copy of the presentation, just let us know on the survey that's going to be hitting your email boxes soon. And we will let a credit representative reach out. They're going to follow up early next week. Please visit our event schedule on our website for details and the full lineup of our upcoming webinars. Next month will feature financial wellness. And if you're in the New York area and in the market for a new vehicle, don't miss our first car sale event happening at our JFK, at the JFK airport, specifically at our hangar branch. You can view the cars in person. It's going to be happening tomorrow and Saturday. So definitely go check that out if you're in the area. But stay connected with us on our social media channels. Be sure to like and subscribe to our Facebook and YouTube channel, where you can watch previously recorded webinars just like this one. But on behalf of Jack, Sutton, Tierney, myself, and the entire credit union team, we truly appreciate you guys tuning in today. Have a wonderful rest of the week. Please stay safe, healthy, happy out there. Anything else my panel would like to add before we close it out?
I do, of course. I got one thing. That JFK car sale, y'all, it's on our event site. And we also have a South Florida, Miami Blue Lagoon branch coming up here in a couple weeks as well. I believe that is 6th through 12th of October. And so make sure if you're in the South Florida area that you give them a visit as well. But all that to say, y'all, all of our events, we do a good job of posting on that website. Check them out. And with that said, I'm done. Thank you so much for joining on today's webinar. We'll see you on the next one.